Kevin Kostoff and Derek Handley here with Kostoff and Company at Nova Home Loans.
Hey, welcome again this week. We wanted to talk about topics that are important in the market today. And with the market going crazy, as you all know, we thought we'd have a little bit of good news today. Inventory's on the rise.
For the first time in many weeks, the number of new listings actually outpaced the under contracts, and the Federal Reserve bumped up the prime rate a quarter of a point.
What does that mean?
Well, actually, the Fed raising the interest rate a quarter of a point really doesn't mean much. But according to our friends over at First Alliance Title and Your Castle Realty, for the week of June 12th, we saw 1,946 new listings and 1,933 under contracts.
Right there.
Yeah. Okay, it's only 13 different.
Well, I'll take it.
But it is the first time in a long time that we actually saw more new listings than under contracts. Our friends over at RE/MAX noted that they had a 20% increase year over year in inventory. Are we starting to see a little change and a shift in our market?
Well, I hope so.
We've heard from several of you out there in the trenches that this year's market is about a month off from last year.
If you remember last spring, the market had us all running really hard. And then May came around and it kind of just slowed down for the rest of the summer, right? Made us all a little bit nervous.
Yep.
While multiple offer situations came and went, really all you need is one to get it done. Right?
Yeah. Don't get us wrong, we still see the feeding frenzy, but there seems to be shaping up to be very similar to last year, but 1 month off.
Yeah. May seem to be a month off, but that's okay. We're starting to see things pick up and maybe just a slight cool down for the next couple of weeks while the inventory comes onto the market.
The good news is the average purchase price held right at $500,000. Actually, the exact number, $498,273. While we would like to see homes continue to increase in value, it's actually a bit of a breather. It's not a bad thing.
Yeah, let's take a little time to get the appraisers caught up with the values in the marketplace, right? The other key item that seems to be on the upward swing, Federal Reserve increased the overnight rate by a quarter of a point.
Well, this does not actually directly affect mortgage rates. Actually, mortgage rates went down a buzz last week after they raised it. It can affect the 10-year bond, which does affect the mortgage interest rate.
That's right. All the talking heads that Kevin and I listen to are predicting at least 2 more increases and maybe 3 from the Fed on the overnight rate. This is expected to put a little bit of a squeeze on the 10-year bond, making them less valuable to investors, thus pressing higher interest rates to keep them buying that 10-year bond.
For sure. We don't think we'll see an immediate or huge jump in mortgage rates, but we are already higher than what we saw earlier this year. So it is important to keep an eye on that, and because it is eroding home buyers' purchasing power.
That's right. The longer they wait to get into the market, the less they're likely to be able to purchase. Let's face it, the rental property prices are going up, so they're spending more money there. They're not going to have as much cash to go in and buy a house when the time comes.
Well, as with anything in life, the only constant is change. Inventory levels are on the increase, and so are mortgage rates. We're hopeful you can use some of this information that we talked about today to help your folks make decisions or get off that proverbial fence. Their buying power is being eroded, so hopefully we can get them in sooner than later.
Thanks for joining us this week. We really appreciate it. Ask us any questions. Go out to our website, go out to our Facebook, go out to our YouTube account, like us, share us. Let us know what we can do to help you and your friends and family get into houses.
All of our links down below. Please feel free to subscribe. It helps us out, and I hope this video has helped you out. So until next time, Kevin and Derek here, checking out.